Welcome to the closing beat, everybody. Happy Wednesday to you. Right, shortened week here. We are financial advisors here at Jazz Wealth. Happy to be a part of your stream today, and thank you for watching. We try to share some stuff with you, teach you. We're big on education here. So if you want to work with a financial advisor who's also a fiduciary, who's also pretty laid back, all of us here, and we like to say we have nothing to sell but ourselves. Come check us out. Everything you want to know is right on our homepage. We don't hide anything. And what on earth are you doing, man? What's the problem? You're good. Oh, just keep going. I just keep talking. Check us out at jazzwealth.com. While other advisors are playing checkers, we are playing chess here. And we play chess for beginners as well. If you need help and you're younger or you have family or kids that you want to get that kind of help and they just won't do it themselves, we work with them as well. Haley's got a great channel you could check out to go over all of the basics. And of course, we're happy to help no matter how young or old you are and how much money you have. Doesn't matter there. Our Wine and Wealth. Tomorrow night, every Thursday night, we do a class just for clients in our portal here. Tomorrow night is going to be on what do we focus on first? It's a new year. We're excited. I get it, right? We're going to lose weight. We're going to eat healthy, stop drinking, and we're going to get our money right. Well, Al won't help with all that, but how do we get your money right? There's got to be a starting point. We don't want to do everything all in one day. Otherwise, you're not going to go back to the gym, and you know how it goes. So we're going to go through that. Where do you start? What do we want to focus on here in January there? All right, so far with the stock market, January is not anything like 2023, all right? We're getting a little bit of pullback here. It's really well telegraphed. It's really probably the cleanest in a while that we've been able to see money and where it's going. Sometimes it's not as easy as this here. But the question is this an opportunity? What do you think? You guys let me know in the comments there. So the pullback here, any pullback to me is an opportunity, but the question is when does it become an opportunity? Okay, so take it in steps here. You may use the broad index, whatever one you like there, usually the S&P. You may say, okay, well, that thing is pulling back. My alarms go off. I am interested in buying something or adding to something or whatever. From there, you go, when will the time be that I'm interested in buying something? Do I need to pull back more than this? Halfway, 10%, 1%? What do you want, right? And then from there, you go, okay, what do I want to add? Do I want to just buy the broad index? Do I want to go individual stocks? Do I like a sector in particular, healthcare, energy, financials, whatever it may be? Or do I want to go use an ETF, right? So just go in those levels there. And that's kind of a simple lesson is looking, if you're a pullback person. If you're a momentum person, you're sitting on your hands, right? You realize that buying strength may lead to you participating in pullbacks, and you'll get around to adding on the strength that you like. I'm a pullback guy. Right? We manage our own funds here at Jazz Wealth, and we have to make those decisions for clients. And the way we operate is we don't make more unless you make more, right? So it's in our best interest to make sure we buy at the right times or scale in at the right times. Very rarely do we do just a one-hit wonder there. Okay, so my humble opinion is, yes, it's an opportunity. It's just not right now. It's a reason to start searching, start scanning and everything like that. And I'm going to help you all out with that today. All right, let's take a look. S&P here. On a really short-term basis like this morning, we had, over here, we had interest rates moving higher. That means bond prices were moving lower just to start the day. And so when the day started, we go, oh, okay, well, I can understand why utilities started off a little bit weak. I can understand why interest rate sensitive sector, right? Real estate. I can understand why that started off weak. However, what happened in the middle of the day, and this is just an intraday sort of analysis, we saw interest rates start to fall, meaning the price of bonds started to go up. So, okay, no problem. That should help utilities. Oh, it did. It turned positive. Well, that should help real estate. It didn't. What does that tell you? Remember, I just said a minute ago, the market right now is being very clear about where money is going and why it's, where it's coming from. So it's not as hard to see what's going to be weak and what's going to be strong. I'm going to give you a great example in a minute. But for the moment, real estate, okay, it doesn't like that. It's telegraphing and predicting that rates will continue to rise. Bonds will continue to fall. I happen to agree with that. So real estate did not rally today. Utilities, a little bit different here because they've got a lot of money coming their way, right? They're, which is weird to say, but their growth profile compared to real estate is better. So a little bit more action over there. It's also discounted, was one of the weaker spots there last year. Now, also kind of bad news, right, today, maybe for real estate, mortgage applications down 10%. That's a big number. That's not normal, right? So big pullback in mortgage applications, even though interest rates were lower. That's not a good sign, right? Remember we were talking yesterday about like the buy now, pay later stuff. You're like, okay, everything's okay, but that bothers me. Well, it bothers me that mortgage applications are down 10% and rates just came off of highs, right? It's not cheap by any, compared to the last 2 years or 3 years, 5 years, whatever. But, I don't like that so much. So maybe another little negativity there for real estate just for today. Now, today was more of the same of what we saw yesterday. Remember, I shared this here with you yesterday. We said all the stuff that did really well in 2023 was doing poorly on the first day of the year. Well, that continued today. All that profit taking from the really successful stocks last year really continued here today. A great way to look at it, we took an extra step here and we said, all right, that's cool, but how else can we show this? Well, we took all the stocks, and instead of just giving you some big list and hoping you get the gist of it, we said, let's put them in little portfolios. We're going to take every single stock, and we're going to say, let's categorize them in 10 different portfolios, and then just put them on a bar chart. And we're going to say that the first one, that portfolio consists of the weakest stocks of 2023. The second one would be the second weakest stocks, and so on and so on. Eventually, we'd work our way to the strongest stocks of 2023. And what we want to do is compare that performance to what we've done so far this year. So hopefully that was a good way to explain it. What we have is, this is the 10 different portfolios called decile analysis, if you want to look at it there. The worst performers in 2023 have been the best performers in 2024. It's early, I know. We're comparing a whole year to just 2 days, right? The second worst performers last year are the second best or almost the second best performers this year. You get the gist of it. The stuff that suffered last year, the value beaten down type stocks, have been getting the dollars from the best performing stocks. The best performing stocks have been the worst so far this year by a long shot, right? And that's really simple to see on this chart because what is that? It's new year profit taking. Right? Because why take it last year with the taxes, right? And then I got to pay taxes and oh my God, I don't want to do that. So we see the profit taking here and we can clearly see where the money's going. It's not going from the best performing stocks to the next best performing stocks. Money is shifting all the way over here, which makes it really simple. If you saw yesterday's show, it makes it really simple to figure out where is it going. Right? Utilities, financials, energy, et cetera, the stuff that really suffered last year. So more of the same today is really all I wanted to kind of share with you there. Let's take a look real quick here at the NASDAQ. It's a rough start for the NASDAQ here. Yesterday, fourth largest drop ever in the first day of the year. The worst was in 2001 when we fell over 7%, right? But this ranks as the fourth largest loss on the first day of a new year. And if you look, although there's only 3 other data points to use there, in all other cases, the rest of the entire quarter was negative. So again, opportunity, but maybe not right this second, right? So a little patience there. Let's do, do we have some winners?
The winner for 2 weeks ago, the week ending on the 29th, your winner was Jarek S. And he is a client, so we are going to credit his account $100.
Hey, Jarek with the winner there. I hope they can hear you because your little guy was, yeah, there you go. You should be better.
Okay. Yeah, so we got Jarek there, and I don't know if you have the leaderboard too, but congrats to Jarek. And then leading, we got Kevin, Peter, Lori, Jerry, and Nathaniel.
I don't know how to do it. Oh, there we go. I did it. Yeah. Kevin's in. This is current, right? Kevin's in.
This one's current. Yeah. So you got your winner from last week, and then your fresh leaderboard on Wednesday, not Tuesday, Wednesday.
Okay, a couple clients in there as well, I see.
Yeah.
You guys, man. I love it when clients win. I don't mean anything against the rest of you, but I just, I prefer to see them win. I don't know what to tell you. Okay, let's do something. I'm trying to add stuff. You notice the new year. Let's try to change up some things here. Let's do, we talk about opportunity. Maybe it's not right now, but let's look at individual stocks that are pulling back from their highs. Not saying these are buys, and I actually want to show something kind of interesting here. All right, notable pullbacks from highs. You got Tesla, not from highs, but notable pullbacks here, I should say. You got SoFi, and I don't know, like I'm saying, these are not go buy these. I can't tell you to do that. I'm just saying, hey, that's notable, right? These are really kind of pulling back here. Rivian, I wouldn't touch that with a 10-foot pole, but a nice little pullback there. And the best performer of last year, falling apart so far this year, Affirm. This is the buy now, pay later trend there. They had that big run up 450% last year, starting to fall apart this year. Profit taking, right? It can't be anything else given the performance of that stock last year. So take note of that sort of pattern in the market, right? Just maybe it's opportunity, maybe it's not. Okay, now I want you to look at things a little bit differently here. What if we look at stocks that are still making 52-week highs? Could anybody guess what sector they may be in? I'm going to give them to you in order here, okay? There's 10 of them. Stocks that are currently hitting 52-week highs while the market pulls back. Sorry. We've got Citigroup. Okay. New 52-week high. Not bad. What's the second one? Regeneron. All right. Those two are not related. That's fine. McKesson. Okay. A little relation there. Maybe there's something there. Cencora. Oh. Starting to see a pattern yet. I'll throw you off a little bit. OneOak. That's an energy stock. It's the only energy stock in the top 10, by the way. Hartford. Uh-oh. You starting to notice a pattern here? AIG. Now you got to get it. Come on. All right? You see it? Let's change it up a little bit. Amgen. Notice how there's really only two sectors we're talking about? I'll go back to that other sector. Allstate. And in particular, the industry. But sticking with the sector, JP Morgan. That's 10 names. In order. Did you notice that? Healthcare and financials. This is not a scan that I could just make up and say, well, look, it happens. No, this is in order. The top 10. In fact, if I were to not bore you to death and I were to keep going, if we look at the top 20 stocks that are hitting new 52-week highs, 16 of them are healthcare and financials. Like I said, the market is being real clear about what it's trying to achieve here at the start of the year. So, and I think I said 16 there is 14. The answer is 14. 20 out of those 20 names, 14 are in those sectors there. So, come on. All right, let's look at some stocks in the news here. Hey, you guys want to start a business with me? Carrier. So Carrier is going to be selling off their fire alarm business, both commercial and residential there. Not the most glamorous industry, but if you guys want to, we could start a fund and maybe they'd be willing to sell to us. They're going to be selling it soon, so that's their way of saying, any takers, right? I don't know, kind of interesting. Starbucks. You like going to Starbucks and getting your coffee and the little cake pops and snacks and stuff there? They're going to add more food. It's going to be an all-day menu, and they want more of your money, so there you go. Costco's already got your money here, and tomorrow they're going to be doing their holiday sales, the December sales numbers. So we'll get a glimpse into how much money you spent, basically. And then Walgreens is going to be reporting earnings, and keep in mind, it's been a rough run for Walgreens. Of the last 8 earnings reports, only 3 times was the stock higher after the results came out. So there you go. Other than that, I'll take your questions now. If you have any questions, there is some adjustments going on in the S&P 400. Very normal for that to happen, and likely we'll get some more updates as the month progresses. There's a couple stocks being swapped out there. I didn't get all the names, so I can't remember there. Patterson Energy was one of them that's getting booted. If you care. If you do, then we'll come back to it and hit it tomorrow. No problem there. I like it. Okay, let's see what questions you have, and then we'll wrap it up there. Yeah, Doc got it. Healthcare and financials. I had a unicorn on my land this year. Had him 20 yards. It's that time of year, right? So in my neighborhood, there are just tons of deer everywhere. They just walk around. They're not scared of anything. And, it's kind of tough to just watch them, like, man, It is season. And a little different there, but that's what it is. Market access has reached your price target. Oh, well, you say, is there potential for more downside? So you're saying maybe it's your price target. No, I don't know. I was wondering if it was your price target to buy, or you're saying, oh, it bounced. I bought it and I got a profit. So I wouldn't sell it on a down day. I'd let like tomorrow come and maybe it tries to attempt a rally. You squeeze a few more pennies out of it if you that's your thing there. Yeah. Yeah, I like some of those stats you're putting in there for me. I like good stats. He says the last 23 election years, not years, election years, 19 of them have been positive. Average return, 11.28. Remember, now you can look at this two ways. An election year is the same as the last year, potentially, of the incumbent. So the reason that stat looks so strong, here's where we stand now, but this will be Biden's 4th year. He's the incumbent. And so the average performance, very strong. You could flip that and say, well, it's an election year. Maybe that's part of the reason for the strength there. I don't know. But yeah, that would be very accurate to say, historically, the average is to the upside there. With, by the way, I would say less volatility, surprisingly, than the other years. Not by much, but still, just something to point out there. Yeah. Have you ever looked at the 712 portfolio theory? No, I have not. I was, today I happened to catch the attention, the 60-40 portfolio. Remember, 2022, that was the worst place to be. A 60-40, because remember, stocks and bonds fell together. 2023, a whole different story. 60-40 portfolio fully recovers and then some. So I was kind of tracking just to see how they... how all that was going, because that was a big topic. And I often just kind of browse around and go, yeah, that was a thing. Let's see what happened. Is there anything there that I can share with you and go from there? Yeah, is there a story behind someone talking? You guys talking about names or something like that? What you guys got going? You crazy people. All right, I will wrap it up there. We have a lot going on tomorrow. Remember, market-wise, there's a decent amount going on, more economic numbers coming out. We had the Fed minutes come out today. Not really anything new that we could use there. A lot going on tomorrow. We'll have Wine and Wealth. We'll have another lesson here for you guys today, and we'll get on it, man. Appreciate you guys watching. Enjoy the rest of your evening, and stay warm. Jazz Wealth, we treat you like family. That was going to be our slogan, but the employees here took it a little too seriously.
You bought what? That wasn't in the plan that I built for you.
Oh, quit crying.
Don't spend one more dollar.
I'm gonna start calling you Sylvester because you sound like a real...
Tú siempre estás llorando como un bebé, llorancito.
I'm not mad. I'm just disappointed. That's how you get your identity stolen.
We decided to go with let our family be your family's advisor.